Welcome back to Corporate Radar. On a day when the overall stock market is still struggling in the red, just trying to make it to the green, Indian hotel stocks has got a 5% thumbs up from the market. And I'm not surprised. The company's EBITDA is up 41% and occupancy is at 71%. Industry's average is 61%. And all this is in a weak, rain-drenched quarter when normally people don't take holidays or hold meetings, we are told. Well, to take us through what worked for Indian hotels in the quarter gone by and how the second half may shape up, I have with me Mr. Puneet Chhatwal, Managing Director and CEO of Indian Hotels. Good morning, Mr. Chhatwal. Many congratulations. And that's what the stock market is screaming. But the stock market probably is also looking at the second half. If you could do a 40% plus EBITDA in such a tough quarter, how will H2 pan out for you when reportedly, everything is gung-ho?
Good morning, Latha. I think I have said it often on your channel, and generally speaking, the sector is in for a very good run. Demand will continue to outpace supply. Disposable income in India is increasing. People are spending more. Foreign tourist arrivals are yet to come to the pre-COVID level. So I would say the best is yet to come. The second half remains the strongest half for as long as we know the hotel sector in India.
Yeah.
And Q3 is the best. We have finished the month of October already at a 16.5% increase in top line. And November is full of weddings, and December helps us with Christmas and New Year. So all in all, we are very pleased we're in the right direction. We should not forget that Q3 has the highest base, being the best quarter, and Q4 the second highest base. But our guidance remains for the year definitely a double-digit increase on the top line. And Q3, Q4 comes more through the rate. So that means the ability to convert to profit is higher. So we should be able to do healthy levels of EBITDA also in Q3 and Q4.
Okay. Well, of course, you have a high base. Likewise, you had a weak base for Q2. But I believe there are 30% more wedding dates in this in the quarter that we are in. So does that mean that 16% also will be put in the shade and you will do even better November, December?
We should do well. We have been doing well. It's our 10th consecutive quarter of a good run. Each quarter has been a record in itself. I see no reason about anything coming in our way except for any kind of geopolitical issue or a pandemic or things like that. I think we started working on the strategy almost 7 years ago when we defined our brandscape. We reimagined our brands. We went to all segments of the market, put all the horsepower we had first behind the Taj and now behind our new businesses. So I think we are looking at things beyond just a quarter. And this year we celebrated 120 years of the Taj. We'll finish 121 on 16th of December next month. So there is a long legacy, and we would like to take, a very long-term view. But definitely in the short term, I don't see any headwinds coming in the way of our business performance.
Yeah, actually, I was going to ask you about these spaces that you have created for yourselves. But since you began that conversation, let me come to that directly. First up, Claridges. That's the latest news that's hit us. Where is Claridges? Is it a new space? Is it, I'm sure it's not as big as the Taj, but it may be better than Vivanta. Where does it figure?
Well, Claridges is the Claridges. Claridges is a very important part of that beautiful location in Delhi, which is just, like complementing the Taj Mahal Delhi, also popularly known as the Mansingh. So with Taj Palace, Claridges, Taj Mansingh, and the recently opened Ginger in Chanakyapuri, I think we almost control or we are almost influencing more than 50% of the supply in that micro market of Delhi, which is very important. To that, you can also add the Ambassador and the Connaught. So all in all, very pleased because the strategy has been to be the most iconic and most profitable. So Claridge's is as iconic as an asset can get in Lutyens, Delhi. So very pleased to have that as a part of our portfolio. And together with the ownership, we will grow the Claridge's brand. Now, whether each hotel will be called Claridge's or it will come in a different form, that decision will happen over the next 6 to 8 weeks as we work in a team. And as and when we are ready, we'll communicate that also on your channel. But at the moment, very pleased to have got the Claridge's, which will complement the Taj Mahal Delhi and a very iconic asset, not just for Delhi, but for India.
Yeah, I would second all the adjectives that you have used for Claridge's and apply to it the Taj hospitality. I think that will be a great combo. But I want to stick to this spaces question because that was interesting. You know, you have you created spaces like Ama, I think, during COVID, even Cumin. You've created for that matter, even Tree of Life is in a way a space, like, it's a boutique hotel. Can you think of more spaces that you are already, embarking on, already you have a game plan for?
Yes, we have also in a very small way started branded residences in Chennai. I think also our extended stay module of Taj Wellington Mews, very successful in Mumbai and then later in Chennai. I think this is a model that can scale up. So there is, and I think there is space for something which has not really happened in a big way in India, and that is an all-inclusive model in the leisure business. So as our airlines within the group grows and scales up, I think there's an opportunity to have a one-stop shop where you buy an airline ticket for a family, whether 3 or 4 or 5, and you have everything included, transfer from the airport to the hotel and back, the stay in the hotel, all meals, all drinks, as is very popular in various parts of the world, especially in Southern Europe, Northern Africa, and the Caribbean. So I think that's one segment which will see a lot of growth in the next 5 to 7 years in the way India is progressing.
Okay. You know, I can get absorbed in that conversation, but I must speak numbers as well. You know, it's a very good margin number that you've announced even for H1, over 28%, 28.5%. And in particular for Ginger, it's Q2 is 42%. Will you do better on margins simply because there's so much demand in the second half?
See, if you achieve operating margin north of 28, then in the first half, then mathematically you should be able to do somewhere close to mid-30s for the full year because Q3 and Q4, as I said, are really very strong in terms of revenue. And I think given that these are consolidated numbers, it's a very healthy number because that really includes our operations outside of India also. So if you looked at standalone basis, the margins would be north of 40%. And I think given the age of the assets and the way we look after our people and invest in our people, I think 40 plus is a very healthy margin, possibly among the highest compared to any possible sector. And we should not forget that historically Indian hotels was between 12 to 14% margin till 7 years ago or 8 years ago.
Yes.
So getting to like 35, 40, 42, this is a big jump and is a proof of the change in the business model.
Yep. You know, I can go on in this. When I first started reporting in the mid-90s, we had that FII rush and there were hotels giving, every third rupee that they make was their profit. You have gone back to that situation. Any new destinations we should know of that you're seeding?
Well, on the international front, we just opened Thimphu in Bhutan and we'll be opening Paro and Phobjikha later part of this year. In the next financial year, around September, October, we'll be opening the Taj in Frankfurt. All these are on capital light model, so there is no ownership in any of this. And when it comes to India, we are opening. The next one is a spiritual destination. To one to look out for is the Taj in Puri, and and also the Taj at the Kochi airport. So these two are neck and neck race. Of course, we are very pleased with the way 6 openings of Ginger happened this year, especially more recently in Nagpur. And the Ginger Mumbai airport has been a runaway success. We have started reporting it also separately, doing a revenue in the first half of already 45 crores at a 55% margin.
Yeah, no, I agree. The margins are eye-popping, and I was going to ask you, whether the number of Ginger hotels will be, more than any of the other spaces that you have. But I have a more important question, and since I'm running out of time, I was reading through your annual report. You had something called Avhan 2025. And
Yes.
what I discovered was even goals that you set for 25-26, you achieved last year, 24. Now that's, really outstanding. So is there a new Avhan coming? What's next for Indian hotels?
It's coming, but I cannot disclose the name right now. Our capital market day is on the 19th of this month, and we will unveil the full strategy till 2030. On the 19th, would encourage you, Latha, and your colleagues to come join us, or if not joining physically, at least to get the web link, and you could transmit whatever we are saying live on your screens.
No, we don't have a choice. If the stock is up 5% and the market cap is also shot up beyond 1 lakh crore, it becomes duty to cover these things. Just a very quick one. I'm running out of time. Would you do anything on wellness? I mean, my complaint would be when I go into a holiday, I hog too much. So would you think of wellness or diet restaurants? Is that a space?
We have that already. We have possibly the highest number of wellness branded operations under the J Wellness Circle. But your point is well taken and well accepted in terms of maybe within that J Wellness, we need to create a space, which is whether it's for special dietary considerations or, generally well-being kind of meals. I think we should look at it, and thank you for the tip. We'll ask our wellness team to get on the drawing board and make it happen.
No, it's just that when you go to a Taj Exotica and look at the spread, it's very difficult to think of diet. So give me a place where I don't even look at it. Anyway, I guess you guys are better at
an exotic dietary menu, but it will remain exotic. It has to be.
Okay, fair enough. We will reserve the remaining questions for the 19th. Thank you very much, Mr. Chhatwal, for joining us today. And again, many congratulations from all your investors for a very, very good performance. 5.88, almost 6% higher now as I speak. Thank you, Mr. Chhatwal.